So I took the fibs from high to low and it retraced. This Fibonacci tool is a retracement tool. So use it for only retracements. If you see that there's a setup happening, a high to low or low to high, you're expecting a retracement when you use a Fibonacci. This is more an advanced strategy to use using the fibs. It's well known, it's very universal. You can use it with anything. Fibonacci, if you want to study Fibonacci, then go to Kurt Cobain's Go Live under his favorite sessions. He all he does is Fibonacci. He trades off of Fibonacci, and I highly recommend you check out Curtis Cobain. He's a crypto educator under the favorite sessions on Go Live. And that's where I learned Fibonacci is from him. Now, it can work out with any pair, any asset, any market, doesn't matter. You can use Fibonacci anywhere. And with gold, it touches the sweet zone. It touches 61.8. And I've been using it sometimes just to get that confluence. But it worked out. You see, guys, I took the high to low because gold has been. Make sure you guys are muted when you enter the call. But yeah, I took the high to low. Okay, and let me see here. The reason why, because it's a clear setup and gold has been buying and eventually it's going to retrace. Eventually it has to come back down. It's not going to go up forever. It has to pull back. Okay, what goes up must come down. It's like the law of gravity. Okay, what goes up must come down. All right, so same thing in the markets. What goes up must come down. It's not going to go up all like it's not going to be bullish all the time, all day, every day. No, no, no. There has to be a balance. Okay, in the markets, there has to be a balance. So that's why I took the fibs from high to low. Okay, 61.8, it touched it. So I marked up the level there. What gold's up must come down. Yo, it's just gonna be funny, bro. But look what happened. Look what happened. It touched. And also look at the candle patterns. Guys, I'm telling you guys, study candlestick patterns. It would change the game for you. Get the Candlestick Bible. It's a book. It's called the Candlestick Bible. Okay. Search it up. I have the PDF version. So for anybody that needs it or that wants it, DM me on the side privately and I'll send to you the PDF version. I want to get the physical version, the physical book. But yeah, it's called the Candlestick Bible. Bible. This one right here. Okay. It has this cover. The Candlestick Trading Bible. Okay. You can get it from Amazon. Okay. This book is amazing. And you will learn everything about candlestick patterns. Okay. This is the book right here. Invented by Munisha Homa. It's a Japanese guy from back in the day. Okay. I believe he's Japanese, but yeah, this cover right here. All right. Make sure to get it. So that way you guys can learn the candlestick patterns. You see right here, when you see this pattern happening, okay, you have a wick, price failed to create a new higher high. And then the next candle is bearish. Okay, whenever you see this, expect price to trend down. Okay. And then the next candle, whoa, sellers came in. Now it started to sell because sellers came into the market. All right. Plus, you have the 61.8 right here. Okay. Now this is a retracement. So you could have caught some pips here, right? For my scalpers. Could have entered right here for a sell. Could have caught a total of 90 pips. That's a total of 90 pips. Okay. This is more of a scalp move. Could have caught easily 90 pips here. All right. But me, I'm an intraday / swing trader. I look for at least 100 pips, at least 100, 150 pip moves. Okay. That's me. You see my brother Rob, he just uploaded the PDF version in the chat. So make sure to download that. Thank you, Rob, for doing that. It's in the chat, guys. Make sure you download it, you save it, and you study it this weekend. Take this weekend to reflect, to study, to back test. Okay, that's what I'm gonna do this weekend. I reflect, I back test, I study more, sharpen my axe. You know, I reflect on all the trades that I did this week. Okay, and I do my journaling. Okay. Like guys, this week I only got 2 lessons out of 7. Right? I got 7 wins and only 2 lessons. And those 2 lessons were small. Like it was a few cents. Right? I didn't lose that much money. It was just a few cents. Why? Because I was practicing proper risk management. Okay. So I took a total of what, 9 trades. Let's see this week. Let me double check. This week I took a total of 1, 2, 3, 4, 5, 6, 7, 8. A total of 8 trades, actually. 8 trades. And I only lost 2. So that's 6 out of 8. Okay. 6, 8. So this week I got a 75% win rate. 75% this week. That's good. If your win rate is at least 70%, then you had a good week. At least 70%. This week I got 75. And those 2 lessons were small. It was 15 cents and 18 cents. It actually broke even. You know, I actually, yeah, this is a break-even trade. I moved my stop loss to entry, but for some reason it just, oh, I see why. It's 2315.08. I have my stop loss. My entry price is at 2315, and it stopped me out at 2315.08. It's that decimal. That's why I got the stop loss. That's why it resulted in 18 cents loss. But yeah, that was actually a break-even trade, but yeah, still, you know, I got a 75% win rate. Were those 1, 2, 3? Yeah, 1 to 3 risk reward. Is that what you mean? Yeah, 1 to 3 risk reward. But now you guys see gold is pulling back up. It respected 2365. You see this key level right here, 2365. Six, 4. Boom. Price broke above, retest, boom, created resistance here, support. Okay, if price breaks below here, price breaks below, expect the retest, wait for the retest. If it opens up bearish, if it gives you a bearish confirmation candle, then ride the trade down to the next key level, which is 2355. It's the next key level because it resisted here, it wicked, created a bearish candle, and boom. Okay. That's if it continues to the downside. All right, if price breaks below this zone here, closes below, retests, and opens up a bearish candle here, and then you it opens up bearish, okay, and it gives you like a wick here, right? And it wicks here, and that's a confirmation for a sell. If it does something like this, okay, boom, boom, retest, wicks the zone, results a bearish candle. That's when you enter for a sell. You guys can either enter here when it as soon as it does this, right? Or you can wait for the next bearish candle to enter and you write a trade down to 2355. Okay. But as you can see here, price is supporting the zone. So it may continue to the upside. Right now it's at 2370. It's respecting this zone here. It's retesting it. This can be my internal zone. 2370. 171. And the width of my rectangles are 20 pips apart. $1 on gold equals 10 pips. For those that are trading gold, $1 equals 10 pips. Okay, so every time price fluctuates, it's fluctuating by 10 pips. So if gold goes from 2370 to 2371, that's a total of 10 pips. Okay, so I'm gonna color this blue because I have outer zones and then I have internal zones. Okay, my outer zones, the gray zones are my hourly zones. My internal zones are like my 15-minute zones. Okay, I can go down to the 15-minute. Okay, right now it's touching my internal zone. Okay, so it may close above and continue to the upside. I'm bullish on gold, so I'm going to follow the trend. I'm going to follow the trend, guys. I'm not going against the trend. Let's see if it breaks above. I'm going to delete the 61.8 because the move already happened. So 2070, 2075. Mark up my next key level. 2075. This can be my next hourly. So my hourly zones are about 100 pips away from each other. Okay, 100 pips away from each other. My internal zones are about 50 pips away from each other. Okay, 50 pips, 50 pips away from each other. And then my outer zones are 100 pips away from each other. Okay, that's how I look at it. All right, 2375. So I'm gonna draw here. 275, 2376, 2374. There you go. Color it gray. This is my hourly zone. Boom. All right, so I have my outer zones, okay, are 100 pips away from each other. And then I have my internal zone, which is 50 pips. 50 pips, okay? And then you can scalp it. For my scalpers, you can scalp from zone to zone, zone to zone, zone to zone. You can catch easily 50 pips by doing this. 50 pips. Okay. This is my support. This is my resistance. Because price is right now, it's in between these two zones. Okay. Why is it my support? Because look, price broke above, resistance, support, and broke above again. Created another resistance. Okay. And came back down, broke below, resisted, support. So now my resistance, okay, this was once a support, broke below, became a resistance. Okay, now it's supporting this level. So whenever I see this happening, okay, price is trending down. Okay, price was once a support and now broke below, created resistance. Okay, so that means that it's a change of direction. Now let's wait to see if price will break below the support level and creates a new resistance here. Okay, so I'm gonna wait. I'm not taking any trades right now. Don't take any trades right now because you're gonna wait for the next break of structure. I'm not trading where price is currently at right now. Why? Because it's in between these zones, and I don't trade in between these zones because I'm not a scalper myself. Okay, for my scalpers, yes, you can catch this quick move right here. Once it does this, break and retest here, you can ride all the way down. Okay, that's a total of 50 pips. Okay, that's a total of 50 pips. And whenever you see this, look at the candlesticks. Okay. This is on a 15-minute chart. You see how it wicked here. Sellers came in, boom. And then you see another wick here, boom. And then price broke, price sellers push their price down. Okay. Now right now, price is consolidating a little bit. Going to the 5-minute, you see that? I take my trades based off the 15-minute or 5-minute. So right now, price is consolidating a little bit. It's indecisive. So whenever you see this, I'm waiting. Okay. Yes, price tried to break below. It broke below, it closed, but then it came back up. Okay, to retest, but I didn't get the next candle wasn't bearish. Okay, whenever I see this, and then I get a bullish and another bullish candle, I'm not taking that sell because I'm waiting for the next bearish candle, right? But that didn't happen. Okay, that didn't happen. Instead, it created a bullish candle. So whenever you see this, do not take the trade. Okay. Plus, look at the candlesticks. Look at the candlesticks. Okay. Whenever you see this happening, okay, whenever you get a candle formation like this, price is indecisive. Okay. Buyers came in and dominated. Okay. Whenever you see this, it's the buyers are coming in. Okay. Buyers are coming in. And then it finally whipped at this zone. Now sellers are coming in. It's pushing price down. See? It's pushing price down. Now, right now, price is here. Okay, let's wait to see if price is going to break below and retest again. Okay, so I'm staying patient. I'm waiting for the next break of structure because right now, price right now is consolidating. Okay. This is a ascending consolidation. I'm going to wait for the next break of structure. So that way it can continue to the downside. See, price is pushing down. See that? Look at this. Look at this wick. I'm looking at the 5-minute. Look at this. Now sellers are pushing the price down. See that? Buyers were trying to fight back, but knocked down. Yep. So, and then it's creating lower. This is a higher high, lower low, lower high, lower low, lower high. Okay. Hour candle. You guys can see the 4-hour candle here. Okay. Now I still have 22 minutes left on this 4-hour candle. If the next 4-hour candle opens up bearish, then it's gonna continue. It's gonna continue to the downside. If it opens up bearish, okay, that's a confirmation that it's gonna sell. So I like to look at the 4-hour for confirmation as well to see if it opens up bearish. Okay. If it gives me that wick at the 4-hour, I get that wick on the 4-hour, I can catch that move for a sell. Okay. If I get a wick on the 4-hour, all right, that you can catch that move. So looking at the FIRE also helps because it can let you know whether price is going to continue to the downside or to the upside. But I'm waiting for price to break below the structure, break close. See, this is a 1 hour candle. See this long wick. That's, sellers are pushing the price down. Okay, so I do see price breaking below. I do see price trending down. Okay. So this is a potential setup, guys. All right, just wait for price to break below. Trade at your own risk. Can ride all the way down at 23.55. That's a total of 100 pips right there. Okay. Now let's check out Impulse. Now that I have this, okay. Let me actually put the zone here. Mark this up here. This is gonna be my hourly zone. If you guys have any questions, feel free to type it in chat or unmute yourself. Do not hesitate to ask any questions. Okay. So this will be my hourly zone, right? 22.55. And then I can have my internal zone like at 23.60 can be my internal zone, but I'm not drawing the internal zone, right? I'm just gonna leave it as it is here. Okay. Because I can just take this, as soon as it breaks below, I can just really catch this trade. My take profit one can be at 23.60. Take profit 23.60, take profit two, 23.55. This is more of a 1 to 2 risk to reward. 1 to 2. $23.65 is my entry. 23.55 is my take profit two. And 23.70 is my stop loss. My stop loss is 50 pips. That's a 1 to 2 risk reward right there. Okay. You guys want to do 1, 2, 3? You can ride all the way down to 23.50. Okay. There's also price action going on here. Right. 23.50. There's more for my savages that want to hold the trade and get that 1, 2, 3. Like me, my sweet spot is 1 to 3. But to be more on the safe side, just do 1 and 2. Okay. 1 to 2. 1 to 2 is also good, guys. I want you guys to understand that. 1 to 2 risk to reward is also good. That's doubling your account. Okay. You can double your account. Now, there's also price action here. Price broke above, create resistance, support, resistance, and then it finally broke above. Okay. But since gold is on a bullish run, okay, now it's bullish. There's support here. I'm sorry, resistance here. Resistance now become a support here, potentially. And then, boom. If it gives you a bullish confirmation candle here, then expect price to continue to the upside. If it gives you a bullish confirmation candle. Again, guys, when it touches a level, when it touches an area of interest, wait for the confirmation candles. Okay. Don't get into the trade right away as soon as it touches here at this level. No, wait for your confirmations. Okay. I don't enter the trade right away as soon as it hits my zone. I do not do that. Just because I have all these zones marked up doesn't necessarily mean that it are entry zones or are that you gotta take the trade right away as soon as it touches it. Wait for the confirmation candles. That's why it's so important to study the confirmation candles because it's giving you more data. It's giving you more. It's supporting your analysis. Okay, but if it fails to create that bullish candle and instead it breaks below. Okay, it breaks below, closes below, and then retests and creates that bearish candle, then it's going to continue down. Okay. Wait for the bullish candle here. Wait for the bullish formation there. If it breaks below, then wait for the bearish confirmation here. Okay. Wait for the bearish confirmation here for the sell. All right. But since gold is on an overall uptrend, okay, you guys can capitalize this move here, right? As you can see here, it's supporting the zone. There's news coming out in less than 12 minutes. So I'll wait until news hit before I take my trade. I'll wait after news. I don't want to take any trades right now because I know news is happening, right? So I'm going to be mindful of that as well. You see, we have news at, in less than 12 minutes, we have news. We have the prelim consumer sentiment. Okay. Why does traders care? Financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay. It's a survey that they do, 500 consumers, which asks respondents to rate the relative level of current and future economic conditions from the University of Michigan. Expectations. This is the inflation expectations. Why traders care. Expectations of future inflation can manifest into real inflation, primarily because workers tend to push for higher wages when they believe prices will rise. So it's basically a survey that they do at the University of Michigan, asking, consumers and people about their expectation on the inflation. So yeah, guys, whenever there's news like this happening, just wait until after it happens. Trade after news, don't trade as soon as news drop. Okay, trade after, wait for the after move. So I would wait, at 7:15 to trade, 7:30, 7:45, and the next hour. So this is Phoenix time. All right, I'm in Phoenix. This is my local time. So 7, so that's 8, 9 Central, and then 10 Eastern. Okay. Wait for every hour, every 15 minutes, 30 minutes, 45, every top of the hour, price reacts. Okay. So when you hit at 7, okay, I'm gonna wait and I'm just gonna follow market structure. I'm gonna follow market structure. Okay. So when you hit, let's see if it's gonna close below or above. If it closes below, then I'm gonna wait for that retest and then take it all the way down. If it closes above, okay, and gives me a bullish move, then you already know it's going to continue to the upside, right? It's going to continue to the upside, and then you just take the buy to 22.75 because that's a total 100 pips. Stop loss can be 23, 23.60. 23.65, 23.75 is my take profit too. 23.60, right? That's a 1 to 2 risk reward. All right, so you have 2 potential trade ideas. Okay, but let's wait what happens. If it closes above, okay, 22.65, if it maintains its support, then it's going to continue to the upside. If it doesn't, and if it closes below, then it's going to continue to the downside. All right. So right now, price is supporting this level. And you see how it's consolidating before news? It always does that. Whenever there's news happening, price tends to consolidate because it's waiting for news to drop. Okay. The banks are waiting. Institutions are waiting. It's building pressure. Exactly. It's building pressure to see where price is heading. And this is all liquidity. Okay, this liquidity here. Whenever it does something like this, that's just building liquidity. All right. It's building liquidity. Liquidity here. Here. That's liquidity right there. Snap. Liquidity. This is liquidity. And this is all liquidity as well. All these buyers. It's all liquidity. There's liquidity up here as well. So where's the money? All right, where's the money? So let's check out Impulse real quick to see what it tells me. Impulse will let me know the momentum of price, the price direction. It helps me to, follow the trend. That's the whole purpose of Impulse. It teaches you how to follow the trend. It teaches you price momentum, where price is heading. So it helps you with that. You see at the 5-minute, it's giving me blue signals, right? Price is above this primary EMA line, so I'm looking for buys. Okay. So you gave me a blue microtrend arrow right here. Okay. Buy. Buys. Buys. Now, right now, it's on a short-term pullback because it gave me a red strength arrow, but the overall trend is blue. See that? So right now, it's still on buy mode. It's still buy mode. Okay. 15-minute is still giving me buy confirmations. See, price is still above the blue EMA. Okay. Secondary EMA lines, I have blue over red. So that's still buy. Now it looks like it's going to cross here. Okay. Price is consolidating right now. If it breaks above here, then I know it's gonna trend up. All right. But if it doesn't and it breaks above, then it's gonna continue down. If it breaks below, I'm sorry, if it breaks below, wait for the retest, take it down. If it doesn't do that and instead it breaks above, retest, write it up. All right, so yeah, guys, is right now it's consolidating. We have needs in less than 2 minutes. Let's see what happens. Right now, though, it's still on buy mode. If you guys don't want to take the sell because it's a little riskier taking a sell because you're going against the trend, right? That's why you have proper risk. You guys want to be more conservative, just wait for the buy here. Just take the buy because you have resistance here. Resistance can now become a support. All right. Or if you guys want to wait until this candle closes, We have less than a minute for the new candle formation. It's supporting this level. So let's see what happens. Let's look at the dollar. You can also use the dollar for confirmation. Dollar right now is pushing down. See, it wiped up all this liquidity. Price dollar is pushing down. Now dollar resulted in a bullish candle. Price is pushing up. And guys, this is a resistance zone here. Yeah, this is a weak news event. There you go. Yeah, price is pushing. Buyers are pushing price up right now. Buyers are coming in. It's touching this area of interest. I don't trade between these zones. I don't. I'm waiting for the break of structure. I use my internal zones more for like take profit, more for like exit levels or stop loss levels. Sometimes as entry levels, but that's more for scalping. I like to take my trades based off my hourly zones because it's more stronger. There's stronger zones compared to my internal zones. I like to take my trades off of the hourly zones. And my internal zones can either be my stop loss or my take profit zones. I'm waiting for that break of structure. Breaks above here. Break above. Retest. Right all the way up. This can be a quick scalp move. Or if you want to wait to do that happens, something like this, and wait for that. but I'm not trading during this. And buyers are dominating right now. Let's see if it breaks above the zone here. Boom. There you go. It broke price, broke above. Wait for that retest. And also wait for the 15-minute candle to close before I take my trade. I'm gonna wait for the 15-minute candle to finish. Price wiped out this liquidity here. Wait for the recess. Wait for the bullish candle to form here. Right all the way up. Are you guys getting some value? Looking at impulse. It broke above. Let's refresh it. Yeah, so it's giving me buy confirmations. So I'm looking for buys. I'm not looking for sells. Now I'm looking for buys. Okay. See, everything is blue. This strength eventually is going to turn blue. It broke above this pivot line here. There's a 15-minute time frame. This is the 5-minute here. It's giving me a blue arrow. Price broke above this pivot line. Price is still above this EMA. See our price is coming back to retest. Wait for the 15-minute mark. Okay, we still have. I'm waiting for the 15-minute candle to close. We still have 6 minutes for the next 15-minute candle to form. And this can just be a liquidity sweep. Let's wait. Now sellers are coming in. It's retesting the zone here. But let's see if it's going to maintain the zone. I'm going to wait for my bullish candle to form. But it seems like that's not happening. Let's see, we have 30 seconds left on this 5-minute candle. We have 5 minutes left on less than 5 minutes on this 15-minute. Let's see whether price closes above or below this internal zone. If it closes below, then I'm not taking the buy. I'm not taking the buy that closes below the structure. You see how it closed below now? I'm not taking the buy. I'm waiting. Yeah, this is just a liquidity sweep. See how price liquidated these sellers here? Okay. Now price is coming down to liquidate these buyers here. Yeah, so this buy trade is invalid. Price is liquidating these buyers now. Sellers is pushing price down. Wait for this break of structure to happen. You see why patience is so key? Look at this, look at this long wick. Okay, so now sellers are dominating right now. They're pushing price down. Guys, when you really study these candles, it's gonna change the game for you. See, most people would have bought here because they saw this big impulsive move to the upside. And oh wow, it's buying up, it's buying up. Let me enter the buy. No, wait for your confirmation. Wait for that break and retest. Wait for everything to line up. Most people would have rushed his buy here because it went up. But no, that was liquidity. That's a liquidity sweep. It liquidated these sellers, now it's liquidating these buyers. Right? Now people that bought here got stopped out. Because they probably bought here and they have their stop loss set up here. And now they're taking away all their stop losses. See why patience is so key? Be patient, guys. Wait for the 15-minute mark to end. We have still have less than a minute on this 15-minute candle to see where price is going. And it seems like price is going to break below this zone here. So whenever you see wicks like this happening, see this wick right here, and then you have another wick here. And then you have another one here. Okay. These are all sellers pushing price down. And then plus on top of that, we have more red candles and blue candles. Price went down, pull back, down, pull back. So a 50-minute candle formed here. Yeah, so price is just moving. This news event wasn't, I mean, it's saying that it was, I mean, it's giving you red and orange felders, and yes, it indicates an impactful news event. But really, look at this. It's a total of what? 50 pips. With a 50-pip move. This is more of a scalp move, right? 50 pips. It resulted in 50 pips. This news event resulted in only 50 pips. Okay. But now look how price is sellers is pushing price down. You see why it's so important to wait after news? Okay. It's calling. You see why price, you see why it's so important to wait for price to push. I'm sorry, you know why it's so important to wait for that next break of structure and wait until after news to trade, because it does something like this. Okay. It gives you a big push up, and then, but eventually it's going to continue to the downside. All right. So I do see price breaking this structure here. Like I said, because it's creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And broke below this low here, create this low. Now it could be another low here. Retest. Yeah, guys. So this is what I see in the markets. I'm not taking any trades this morning because I already hit my percentage for the week. This call was more of a review and chart work. I hope you guys are seeing it and are really following these patterns. But yeah, I caught this 150 pips move. I caught this buy yesterday. I called it out yesterday as well. I called it out. Like, yesterday there was unemployment news that pushed price up. Okay, this is unemployment right here. Thank you, Vlad. Appreciate you for being on. But yeah, guys, I called this move out. I marked up this swing 30, and I said that if it breaks above, closes, then take that buy. And I took it, you know, I took it here, right? It price broke above, and then it was consolidating. I was building up liquidity here. And I took my counter trend line, I drew it, right? I drew my counter trend line because I wanted to see if price is going to break above my counter trend. And it did. It did. You see that? I have my entry set up at 23.30. Price touched it here. It broke above my counter trend. And I took the buy for a total 150 pips. So 1, 2, 3 risk reward. This was more of a trend trap strategy. You see how this is all liquidity. It breaks above, wait for that retest, and boom. And then overall, the market was trending up. So I'm going with the trend. I'm looking for buys. Created a higher high here, higher high here, higher low here, higher low here. So I'm looking for buys. That's why I took the buy and I just waited for my confirmation candle to form, and it did. That's how you're able to capitalize on these type of trades. Now here it hit a resistance point. Now it's trending down. Wait for this next break of structure, right? Continue to trend like that. See how the 4-hour candle, it opened up bearish. Let's see. So now you have this long wick here. This 4-hour candle is pushing price down. See how this 4-hour candle closed below this structure. You see this long wick. So yeah, guys, I do see price pushing down. Because it's been on a buy for quite a while. And then looking at the overall picture, price is trending, broke above. But right now, price is pulling back down, potentially to this area here, 23.55, 23.50 area, 23.50 because this price action going on here, 23.50. So price may come back down to retest this area here at the 4-hour candle time frame. Okay, so it may come back down to this zone here, come back down, and then boom, continue to the upside, because that's a break and retest. You guys also got to see the overall picture of it, so you guys can take advantage on the pullback down, taking sells, or you guys can take advantage of the buys in between. As long as you're trading from zone to zone, you trade based off the key levels, you'll be good. All right, so now you see at the 15-minute, it's closing below. It took out all these buyers. Wait for that retest to form. Wait for that retest, and then wait for the confirmation candle, the bearish confirmation candle. But yeah, guys, stay on top of it. I hope you guys got some value. And I'll see you guys Tuesday. Reflect this weekend, back test, study more than you trade. Do not rush into trades, study more than you trade. I study more than I trade. I only took a few setups and I hit my percentage. Tonight, this morning I'm not trading, okay? Because I hit my percentage for the week. And I'm sticking with that. I'm not greedy. Okay. I could have easily caught this sell right here. I had it set up to 61.8, but I didn't. I could have easily set up my pending orders for a sell as I knew it was coming, but I didn't. Why? Because I hit my percentage for the week. All right. I'm not being greedy. Because what if it would have continued to the upside? Right? What if it would have stopped me out? Then I would have felt, I would have been in drawdown. Okay. Control what you can control. What you can control is your emotions, your mindset, your behavior, your attitude, your trading plan. That's what you can control. You can't control what's going on in the markets. You can't control price. You can't control the movement of the price. You can't control what the banks are doing. You have no control of that. What you can control is your mindset, your perspective, how you look at things, your behavior, your mood, your attitude, your trading plan. That's what you can control. All right, guys? So be patient with this. You see how it's touching this price level? It's retesting. It's giving me this wick. Price breaks below this EMA, then I'm looking for sales. It is this blue EMA turns red, then it's sell mode. All right, so it's giving me red arrows. Strength is red. Yeah, so price is trending down. See this EMA, this price is below this EMA. 5 minute. We have 40 seconds left on this 15-minute candle. Price broke below the structure. It's breaking structure. It's looking bearish. Now price wicked here at the zone. I'm gonna wait for this bullish candle to form to hit my zone again because I want at least one touch. At least one more touch. Now is the 30-minute mark. But yeah, guys, just wait for that retest and wait for the next bearish candle to form, and then that's when you take the sell. So I would wait for the 45-minute mark. Let's see how price reacts again on the retest. All right, guys, so I'm gonna end it here. Stay on top of it, wait for that retest, wait for the red confirmation candle to form on the 15-minute to be more on the safer side. Wait for the new 15-minute candle to form at the 45-minute mark. Okay, so wait for that bearish 15-minute candle to form. So that way you have more confidence to take this sell. All right. I would rather wait for that 15-minute candle to retest and then open up bearish before I take my sell. Okay, because right now it's retesting. You see how it broke below, it's coming back to retest. Okay. But I'm not taking a trade now. I'm not taking a sell now because I'm waiting for my confirmation candle to form. I'm waiting for my sell. I'm waiting for my bearish confirmation candle to form at the 15-minute. All right. If it forms at the 15-minute, then I'm gonna take the sell. If it wicks, if it gives me a wick and it pushes down, then that's a confirmation for a sell. Then that's when you take the sell. Not right now, okay, because I'm not getting confirmation candle. All right, it's giving me a bullish candle. All right, it's giving me a bullish candle at the 5 and 15-minute time frame. I'm waiting for my bearish confirmation candle to form at the 15-minute, and that's when I'll take it. All right. If it breaks above again and opens up bullish, and the trade is invalid. Okay, wait for that break of structure. It broke structure, but wait for the close below structure and wait for the confirmation candle that results a bearish candle to form before you take a trade to the downside. And once that happens, that's a valid entry, and then that's when you catch your pips, 100 pips from 23.65 and 23.55, and then that's when you use proper risk and you manage your trade throughout the day. And that's how you take entries, guys. That's how you take trades. It's by waiting, by being disciplined, and by following your trading plan. Because if you don't follow your trading plan, then you won't last as a trader. You won't succeed long term, and then you're gonna end up not accomplishing your goals that you set for this year because you're not practicing proper risk management and you're not practicing the proper rules. So shift that into a mindset where you're abundant, you're disciplined, you follow your training plan, you're not being greedy, you're not rushing into your trade, you're waiting, you're being patient, you're being disciplined, okay? And you're staying true to your word. I appreciate you guys for being on here. Let's run it up. Have a blessed weekend. And let's spread the word. Let's get more people on this calls. Okay, let's spread the word. Share it to a friend, share it to a family member, because access to information can change your situation if you allow it to. Let's run it up, guys. Have a blessed weekend.